Good morning. This is Ken Long from Tortoise Capital with a review of the weekend trading reports for September 7th, 2014. There will be no webinar tonight as our soccer team is making it to the finals of our weekend tournament. I'll hang this on YouTube shortly. Market is in bullish quiet conditions on an annual basis. We're almost overbought at the high end of neutral with a score of 69 out of 100 on weekly RSI 14. 10-day basis, we're overbought at 83 out of 100 on the 10-day NDX. Looking at the market mosaic, price relative to the 200-day moving average is yellow bullish with about 5.25% cushion to sideways markets. Slope of the 50 remains yellow neutral. The risk index is the 30-period moving average of the VIX divided by the 10. The threshold between risk on and risk off is 1.0. The current reading is at 1.11, which puts us in risk on conditions, meaning that riskier assets are favored to own. When you take that square of 1.11, compare it to the last 5,000 trading days, and find the standard deviation, gives us a risk z-score of 1.25. You can see the 90-day time series of that indicator here. We've moved from minus 2z to plus 1.5 and starting to decay. So there's no such thing as easy money, but the easier money has been made already in that move in XIV when the volatility began to dry up. Blended monthly rebalancing. You can see the current holdings. This should read next reevaluation on or about 1 October. And you can see the current holdings here, and then the current leaders based on price action at the close on Friday. In ETF2, the theoretical exposure is at 80%. The model portfolio is also at 80%. Quick look at the ETF 13 and ETF 32 portfolio statistics. You can see Brazil and Latin America continuing to dominate the commodities. Europe, gold, continue to lag. This is the ETF Max. This looks at about 1,300 ETFs through that same lens. I like the ones that are green and white, so we'd be looking at biotech as on the move up. Market vectors, Vietnam, China industrial, and the golden dragons from China. Meanwhile, Brazil right at the top and dominating. India is starting to give back some of its gains. This is looking at the top 40 or so of the S&P 500 through the same lens, and it adds the sector spider that they are a member of. U.S. Steel continues to be awesome. International Game and Vertex and Chipotle continue to do well. This is the market health check. You can see we've completely dug out of that hole that we found ourselves in after this brief sell-off. Notice the large range days and then the grinding rebound. We've closed above the previous swing high and held it there for 10 days. And the slope of the 10-day and slope of the 30-day regression lines are both up. You can see how the slope value of the 30 has rebounded nicely, is now positive, and is now coming back up to same place where it started to collapse last time at a slope value of about 0.30. Not quite extremely sloped up yet, but this is still a pretty good 30-day performance. We've been overbought for almost 20 days now. It can stay that way for a long while, as you notice in a bull market. The jaws of PPO have closed, and that suggests that this chapter has come to an end, and now it's a question of how it's going to respond. And what you notice, we have two dots here on the parabolic stop and reverse. That's always been a warning sign of the end of one leg and the beginning of a new one. Now, whether that's sideways channel or a next leg up or a pullback to the Bollinger Band mean in the river remains to be seen. But you should be preserving these profits and adjusting your stops accordingly. ETF2, 8 out of 10 sectors are on a buy signal, which puts us at 80-20 in terms of invested in cash. The S&P at 73 is better than the rest of the globe at 67. Inside the U.S., it is tech, then large caps, mid caps, and small caps. Two strongest sectors are Latin America at 86 and emerging markets at 78. The two weakest are Europe and the Euro-Asia blend. World market model, the small caps are lagging. The large caps are winning above average, and technology is exceptionally strong. Just notice the great strength continuing in Latin America, Brazil, Canada, Mexico. Asia less Japan is above average. You can see the winning the winning countries in Asia. Only South Korea is below average. Everything Europe is lagging. And oil and commodities lagging. Treasuries and real estate are strong. ETF2, looking at the top 30, again, you'll see the same patterns here. Brazil, China, Latin America, everything Asia on the way up. India is starting to lag a little bit. The Dow 30 through the same lens. Intel and Microsoft, Home Depot, United Health, and Disney are the top 5. Intel just continues to march. United Tech, Boeing, McDonald's, American Express, and DuPont are the laggards. AT&T can be on the way up with a white and then a yellow, as is IBM. Home Depot is one of my current favorites. It's green and white, so there's still room for it to gain. And some reference charts on liquidity and volatility for the ETFs. Shifting to the daily report, Treasuries on a channeling and overreaction, energy and coal on a 551W along with Chevron, DuPont, and IBM. In the auto framer, Cliffs, Natural Resources, gold, McDonald's, Treasury, and silver. Otherwise, no change. We have Boeing on a RSI2 score of 9. Visa and McDonald's testing out nicely on the auto framer, and a couple frog quality numbers better than 3. In the ETFs, it's Treasuries on channeling and overreaction, a couple dojis, 551W in energy and coal. We have the VIX on an RSI2 value of 10, and then gold, silver, and Treasuries testing out well on the auto framer. Here's just the framing data for the auto framer for you. And in the regression line fractals, the laggards, McDonald's, American Express, about 6 ATRs below their 270 RL. Intel still leading the way along with Home Depot and Goldman. And a few stats here from the market mosaic. You can see that we've kind of stabilized back here at fair value around 201. And the sideways regime is back on. We've made almost a 3 SD move in terms of improvement of the slope of the 30. The last time that happened, and it was more than 1 SD above, we've had a couple 2 pull-offs, so that's why I say prepare yourself. I'd be treating 198 here as support, and if that fails, then it's back down to 195. That's everything from Tortoise Capital. The girls take the field here in about an hour, and then one more game in the evening. They're playing very well, so we appreciate all the support out there. Keep your risk measured and your powder dry.